Welcome to The Explainer. Today, we're going to talk about a trading idea that basically flips everything you think you know completely upside down. It's all about finding your edge, not in the crazy chaos of the market open, but, believe it or not, in the quiet hours just before it.
So let's dive right in and talk about something that I know frustrates a ton of traders every single day, and that is the market open.
Yeah, this this just hits home for so many people. That feeling of just chasing candles, getting chopped up in all that volatility. You know, that first hour of trading, it has all this energy, all these big moves, but for so many of us, it's just a recipe for making bad emotional decisions and, well, losing money.
So that really begs the question, right? If the first hour is supposed to be where all the action is, why is it so incredibly hard to actually make money then? The answer kind of shakes up the whole idea that the open is where the real opportunity starts.
Well, the secret, and this is what we're digging into today, is all about completely shifting your perspective. It's about looking at the market during the hours when, let's be honest, most retail traders are completely offline. We're talking about the overnight session.
And just look at the difference here. It's pretty stark. On one side, you've got the market open. It's total chaos, right? High volatility, emotional decisions, just chasing price around. But then, look at the other side, the overnight session. This is where you see clean setups where the big institutions are quietly setting up their positions, all pre-planned.
And here's the key insight, the real aha moment. All that crazy, frantic price action you see right when the opening bell rings, it's not the beginning of the move. It's often just the end result of a plan that was put into motion hours before. The foundation for the day was already laid while most of us were still asleep.
Okay, so how do we actually turn this idea into a strategy we can use? Well, it goes by a few different names. You might hear it called the midnight open or the initial balance breakout, but it's all basically a type of opening range breakout strategy.
At the very heart of this whole thing is one really simple but super powerful concept, the opening range. The best way to think about it is like the market is drawing a sandbox for itself early in the day. And the high and low of that sandbox, well, they become incredibly important levels to watch.
And the process itself is actually pretty straightforward. Step 1, you define a specific window of time, let's say the first hour after midnight, and you just mark the high and the low of that period. Step 2, those levels, that high and low, become your critical boundaries for the rest of the day. And step 3, you wait and you watch for a strong, decisive move outside of that range.
But here's the thing. Just blindly trading every breakout isn't the whole story. To really get this, we need to understand the why behind it. Like, why does the market even do this? Why does it build a range just to break out of it later?
This is where we get into this really fascinating theory about how the market is engineered. Some traders believe it happens in a three-step cycle. First, you have accumulation. This is where the big institutions are quietly building their huge positions inside that range. Then comes manipulation. This is the sneaky part. Price will often make a quick move in the opposite direction to trigger people's stop losses. And finally, you get distribution. That's the real intended move, expanding away from that range.
Now that whole manipulation phase, it's all about one thing, liquidity. Just imagine all the stop loss orders that traders place just above the high of the range or just below the low. Those are basically pools of orders waiting to be filled. That brief, false move is designed specifically to hit those stops, to grab that liquidity, so the big players can get the rest of their orders filled before the real move kicks off.
Okay, so that's the theory, and it makes a lot of sense. But how do you actually use this in a practical way? How do you build a framework around it and, avoid getting caught on the wrong side of that manipulation?
Right, and this is key. Success with this isn't about taking every single signal. It's about filtering for only the best, highest probability setups. So what does that mean? It means looking for things like a big spike in volume on the breakout. That's confirmation. It means making sure you're trading in the same direction as the bigger overall trend. Some traders even use things like fair value gaps, which are basically just imbalances on the chart to see if institutions are really behind the move. And probably the most important rule, stay away from the middle of the range. That's just a chop zone where you're likely to get shoot up.
So, you can put this all together into a really disciplined plan. Your setup, a clear, confident price close outside that opening range. Your entry, you can either jump in right on the breakout or wait for price to come back and retest that boundary. Your stop loss, you place it back inside the range, maybe at the halfway point. That protects you if the breakout fails. In your target, you set a predetermined goal like 1.5 or 2 times what you're risking. Simple, clear rules. So when you boil it all down, what's the big takeaway here?
It's really about a fundamental shift in how you see the market. It's about moving away from just reacting to all the noise and, instead, learning to trade a predefined structure. And this is the most important part. By focusing on the structure that's built overnight, you can actually have a clear plan with your risk already defined before all the chaos of the opening bell even starts. You're not chasing candles anymore, you're trading a plan.
You know, this whole concept really challenges us to look for our trading edge in places that aren't so obvious. It's a great reminder that sometimes the quietest times on the chart actually hold the most important clues. So it kind of leaves us with one final thought to chew on. Where are you going to be looking for your next edge?